We are here with Jay Snowden, CEO of Penn National, which is the country's largest regional casino operator and now a much more diversified company. And Jay, we've got to begin in 2020 with the question of the year, and that is COVID-19. How is Penn National navigating COVID, and what do you see for the near and midterm for your company and for the industry?
Well, Frank, good afternoon. Great to be with you. Thanks for having me. Listen, 2020 has been a really unpredictable, unprecedented year for all of us, whether you're in business, whether it's personal, combination of both. It has been a really challenging year because none of us in January this year knew what we were going to be dealing with just 2 months later in the month of March. And so it's been the highest of highs. Beginning of the year, we announced our investment in Barstool January 29th, and we were very excited about that partnership. I think the market responded very positively. And it wasn't but a month later, we were ringing the bell on the NASDAQ. And 2 weeks after that, in mid-March, we were required to shut all of our casinos down and racetracks across the country, and found ourselves in an environment where we had zero revenues coming in. So we took some significant drastic action at the executive level, and took pay cuts across the board. No questions were asked. We had to furlough 90% of the company team members when our properties were shut down, both corporate and property. And we had to be really creative working with our landlord on some rent relief. We were able to, through that time frame of even when the properties were shut down, we kept our Penn Interactive division up and running so we could continue to work on the development of our sports betting app, Barstool Sportsbook, which we have since launched in Pennsylvania, as you know. And once May and June came around, there were some states that allowed us to reopen some of our properties on a limited capacity basis, so at about 50% of our normal capacity. So we've gone from the lowest of lows in March and April, where all of our properties were shut down, and then in May and June, we were able to reopen a number of them. And we find ourselves here today in October, having reopened every one of our properties other than one. And most of them have reopened quite successfully. The amenity mix obviously is different than it was pre-COVID. People are not desiring to eat in buffets or full service restaurants inside of our facilities. The way that we think about marketing to our customers continues to evolve. The demographics of those who are visiting our casinos is much younger than it was pre-COVID. I think that will continue to evolve as well as the months continue to move, and there's potentially a vaccine in our near future or effective treatment. So we've weathered the storm, I think, as well as you could, understanding that it's been a really challenging year, particularly as it relates to our team members. And that's what we care the most about. So we've been, very focused on maintaining health insurance and health benefits for our furloughed team members and bringing as many of them back to full-time status and part-time status as we've reopened these properties as humanly possible. So we've learned a lot, certainly. And I think that where we find ourselves today is probably better than I anticipated back in March, but still, it's been quite a challenging year.
One of the things that seems to have come out of COVID, and you've alluded to this a little bit when you talked about the amenities, is a lot of casino operators have brought their cost structures down significantly, and they think that much of that will be able to remain in the future. How do you see your cost structure evolving?
Well, that evolution that you're speaking to, Frank, and sort of the way we think about, how much of that is sustainable and structural in nature is almost entirely driven by what the demand is from the consumer today, which is different than it was just 7 or 8 months ago. There's a demand for more technology around initiatives like cardless and cashless and contactless, something that our industry has been very slow to embrace. I think you're now hearing regulators who are hearing directly from consumers, we got to get moving on this. We're the last industry standing that still requires you to go to an ATM to take cash out of your own bank account, pay a fee, to buy in cash at a table game, to cash out in chips and go back and get your cash at the cage. It's very archaic. So this is going to be, I think, an accelerant in many ways from a technology standpoint that consumers have been waiting for. And these younger consumers that I had mentioned earlier that are visiting the casinos more now during COVID because there are less other entertainment options for them, like concerts and live sporting events. We're seeing a lot of younger customers, those that are 21 to 45, 21 to 50 years old. And it's an expectation, right? And so we really have to think through the technology, the experience, the products that we offer. And from a non-gaming standpoint, I think we've all just listened to our customers and what are they looking for from a food and beverage standpoint? What are they looking for from a hotel experience and the technology offerings in those hotels? And we personally, on the Penn side, have learned a great deal through our partners at Barstool. I think they are one of the most successful and innovative sports media, pop culture brands and companies on the planet. And the way they think about marketing and the way we have traditionally thought about marketing is very different. And we've had them take a fresh look at some of the things that we've been doing at Penn for a long time that we viewed as sort of, industry orthodoxy. These are things you have to do. Buffet marketing, billboards, radio, TV on car promotions. And I think we're thinking about that very differently now. And you're going to see a much more digital and technology focus for us, even in our brick and mortar facilities as we move forward.
Yeah, that's a very interesting observation. If you look at it from the gaming equipment side, I've often thought that the most innovative companies have often been those that were not based in Nevada, for example, that brought, WMS, which was a pinball company originally, and they just bring a different perspective to things.
Yeah.
Incredible technology today, which started as an arcade game company.
That's right.
You referenced the sports betting and Barstool, and you said a good investor response. That's probably a nice understatement because your stock has shot up and maintains its position at or near all-time highs. What do you say to investors who are looking at that nearly all-time high price about entering the stock today?
Yeah, I field that question a lot, as you can imagine, Frank, and it's nice when the answer is really easy, which is we're in the first inning with regards to executing on this, what we believe to be really differentiated omni-channel approach that we have at Penn. We really have the best of both worlds. We have the largest domestic footprint in the US, as you mentioned, the largest regional gaming company, quality assets across 20 states in the United States. And we have this digital business, which we are now live in one state, right? So we have launched in Pennsylvania. We have our earnings call in the next couple of weeks, so I can't share any more than what's already been shared publicly. But what we shared soon after launch is that we had a great response with regard to downloads and registrations and first-time depositors. That first weekend, we shattered every record ever in terms of sportsbook apps in any state on opening weekend. And the second weekend, as I announced publicly, was stronger than the first weekend by double digit. So we've got great momentum right now, but we're in one state. And so I think we're still proving this out. One of the things that we're very excited about is that the second state that we're going to be launching in is the state of Michigan, which best indication we have right now is going to be sometime mid to late November. And why Michigan is so important is because in Pennsylvania, as well as we've done, and we think we're largely growing the market, which is very important as opposed to just stealing share. That Barstool audience is very loyal. And so we've been growing the market from what we can see and all the data is telling us. Michigan, we're going to be launching as opposed to playing catch up like we are in Pennsylvania, where we were a year late to the game. In Michigan, the gun goes off, we're all at the starting line. And so I think it's going to really be a nice proof point for us to show maybe what many other states will look like once we've had the appropriate time to play catch up. What does Michigan look like in month 2 and month 3 might be a fair indication as to what it'll look like across the country in the 20 states where we operate a few years down the road. So we're in inning 1. We haven't even launched our online casino product within the Barstool Sportsbook app that will make it very competitive. And we're going to be launching in Michigan with both sports betting and then very soon after, when the state is ready, for online casino as well. And I think you should expect for us to go from 1 or 2 states in 2020 to over a dozen states that we'll be live in with both sports betting and online casino where it's legal by the end of 2021. So we're excited. We have a lot to prove. And the initial excitement around the launch of our app, the ratings that we have on iOS 4.8, it's best in class up there with FanDuel and DraftKings, and user experience and retention rates have been great. So we're very excited today.
And that kind of leads me to my next question. If you look historically, Penn National started as a family-owned racetrack in South Central Pennsylvania and has since diversified into a company that has regional casinos, destination resort casinos, all the emerging forms of gaming that you've been discussing. If you can take out your crystal ball and look at Penn National 3 or 4 years down the road, what will the company look like?
Well, my crystal ball, Frank, is really foggy. I wish I could tell you that it's super clear. What I will tell you is that what the company looks like 3 years from now, 4 years from now, will be very different than it does today, and certainly very different than it did 8 or 9 months ago. I think you should expect Penn to be a leader in omni-channel, and we have, the nice thing, Frank, is that we have this glue that is our player loyalty program called My Choice. And My Choice is going to be, by the end of this calendar year, fully integrated with all of our products. So all of our brick and mortar casinos, our brick and mortar racetracks, if you just like to bet on horse racing, our online sports book, our online casinos, it's all held together by our loyalty program. And so I think you can envision down the road that we're going to be operating in more states, because the more states you operate in, the bigger the opportunity, not just for your retail, but your online digital business. The bigger your database grows, which makes your loyalty program that much more valuable. And I think that we talked during our last capital raise that we think there's so much we can do with the Barstool brand in partnership with Dave Portnoy and Erica Nardini and Dan Katz that no one's even thinking about today. And a quick example I'll give you of just how powerful that brand is, not just as it relates to sports, but as it relates to pop culture and as it relates to being a lifestyle brand. They initiated a relationship just this summer in the month of July with Gallo, which is the maker of a product called High Noon. It's a hard seltzer that if you live in the Northeast, you know about it because you can't find it anywhere. You go to liquor stores and it's sold out. And High Noon sold more product in that first month of their relationship with Barstool than they had sold in something like the previous 2 years in terms of cases sold across the US. And I think when you really think about the power of the Barstool brand and how loyal their audience is, and when Dave and Erica and Dan and everyone at Barstool get behind something, like they're behind the Barstool Sportsbook right now, you can envision a lot of doors opening up and potentially some adjacencies that we can invest in that we're not even in the business of today. Standalone restaurants and bars, maybe nightclubs. There's so many things that we can do on the digital side and maybe around food and beverage products and bar offerings and things of that nature. So I would just tell you, stay tuned. It's something that I talk about every day, it feels like, with Erica and Dave and my team at Penn and her team at Barstool, because the opportunities are endless and we're just getting started.
One of the ways that, maybe the way that Penn National has gotten to where it is in the brick and mortar world has been through being very active in consolidation and M&A. What's your philosophy on that at this point?
Well, it's evolved a lot, Frank. Pre-Barstool and pre-sports betting, M&A for us along the lines of when we acquired Pinnacle Entertainment, great company. The portfolios were quite complementary. They were in a number of states and markets that we were not in. And so we pursued that coming together of the two companies. And we believe what came out of it was one stronger company than the two standalone before that. And we delivered on the synergies beyond what we said we could do. $100 million was the target. We ended up around $130 million plus. And so it was good for shareholder value creation as well. I would tell you that today, as I sit here with you, I think about M&A on the retail side as really needing to be strategic moving forward. I think gone are the days, because of how large Penn is today and how important the omni-channel strategy is for us and our future. Gone are the days of just finding an underperforming standalone asset in Illinois or Mississippi or Louisiana and acquiring it because we believe we can operate it better and maybe grow EBITDA by 10 or 20%. It just doesn't move the needle for us today the way it did 3 years ago or 5 years ago. As I think about M&A today, if you should expect to hear from Penn, if we're being aggressive and offensive with regard to M&A, it's probably because we're doing something that not only gets us access to brick and mortar and a database, but also some digital opportunities around sports betting and online casino in states where we're not in today. Much like we announced as part of that rent relief package that we did with GLPI, our landlord, we also had an option to acquire the OpCo for the Perryville, Maryland property. at very good economics. And for us, that made strategic sense because we did not currently operate in the state of Maryland. So you have access to a database as well as sports betting, which is on the ballot this November.
Okay, very interesting. One specific question, a current issue, including Penn's home state of Pennsylvania right now, is the efforts to legalize more slot routes throughout the country. And you've been a little conflicted on that in the sense that you operate routes, but you do so defensively in terms of your casino markets. How do you see those efforts playing out?
Well, you're right about conflicted. It's very clear in my mind how distributed gaming can be legalized in states where it isn't, and done in a way where it creates win-wins across the board. And I think Pennsylvania currently, not the bill that is being debated right now, but the way that they initially approved distributed gaming was at truck stops and remote locations around the state. That to me can make a great deal of sense because you're not cannibalizing the existing brick and mortar casinos across the state. Louisiana, as you know, has had video poker at truck stops for years and years, and I think that's been largely complementary to the brick and mortar casinos in the state of Louisiana. The model that doesn't work, in my opinion, and I'm adamantly opposed to, is the Illinois model. Yes, we are in it. We did it as a pure defensive play because the bill passed and we were being cannibalized. We have 3 brick and mortar casinos in Illinois. And if you look back at the damage that distributed gaming model in Illinois has created to the brick and mortar facilities, it's mind-boggling and very concerning if other states are considering this. You look at the gaming revenue and the taxes generated from those brick and mortar casinos, and it's down over 20% over the last 5 years. You look at employment, which is something that we all care about and state leaders care about. And since distributed gaming was legalized in Illinois, you now have thousands of bars and taverns that have 5 slot machines each. There's over 30,000, maybe 40,000 now of these VGTs across the state on every street corner. And employment at the brick and mortar facilities is down over 25% over the last 5 years. And by bars and taverns simply putting VGTs in their bar or tavern or cafe, employment doesn't go up. So the net effect is that employment goes down if you expand distributed gaming the way that Illinois has. And lastly, and I think something that never gets talked about, as much as we talk about it as a company, is very troubling, there are zero responsible gaming protections in those bars and taverns, other than a bartender who has never worked in gaming in their life, knowing if somebody is of age, carding them, and more importantly, are they on the state disassociated person or self-evicted list? There is no way of knowing that today in Illinois. So somebody who is evicted from a casino can walk right into a bar down the street and sit down and play at a slot machine when they have a problem. That is a big issue that has to be solved for in Illinois, and of course, anywhere else where it's being considered across the country.
Okay, great. We've covered a lot of ground, Jay, and you've been generous with your time, and I appreciate it. One final open-ended question. Anything else you would like to say about Penn National?
Well, that open-ended, this could go another half hour if you give me the open mic on what I want to say. I think one thing that I probably haven't done a good enough job of over the last 7 or 8 months of articulating that we're really excited about is that we have 3 independent growth stories at Penn. And just a year ago, you could argue if we had one, because regional gaming was sort of a very slow growth, unless you were pursuing M&A and extracting synergies, growing your earnings and EPS was becoming a real challenge in regional gaming. And where we sit here today, because of how we've reimagined our business, as you and I spoke about for our brick and mortar, we're seeing margin improvement in the high 100s, close to 1,000 basis points year on year. Most of that structural and sustainable. The online business is a huge growth opportunity. You and I talked about we're in the first inning. And then lastly, that I haven't done a good job of articulating is that back in January, we made an investment in Barstool Sports, the media company. And that company, who would have thought, after a year of COVID and many months of no major sports, you would expect a sports media, primarily sports media business to struggle. And I think what they've shown is that they are so innovative and they've pivoted into trading stocks and unboxing and Twitch video game viewing. They've done so many creative things. Barstool Sports is a standalone entity of which we own 36% of and have a very clear path to majority control of over the next 3+ years are having their best year ever. So we went from having really no growth story, a significant growth story on the top line at Penn just a year ago, a year and a half ago, to now having 3 separate businesses that are all considered high growth. And so we're very excited. And I mentioned to you earlier, we're in the very early innings here. I would say the first. We have a lot to prove out over 2021. We've got a roadmap that's going to keep us very busy. So I would say there's a lot to be excited about if you're following Penn National.
And you are clearly a very enthusiastic guy.
Yeah.
Jay, thank you very much for your time today.
Thanks, Frank. Great catching up as always.